Okay, morning guys. I'll just get myself organised. Excuse me, get myself organised, and we'll get up and running. Just wait for a few more people to jump in. Okay. Right, I was just going to mention before we get started. I did a talk last night, it's a webinar for the ATAA around 8 o'clock last night. So I've got the link for that. I'll get the link for that, and I can shoot it off to you if you like. I'll probably post it as an alert into the app. And then anyone that doesn't get that, you can just email me at support@tradesetup.com.au, and I'll send you that off link where you can view it there. And it's worthwhile. Anyone that's not in ATAA or that hasn't joined up, it's worthwhile jumping in. I think they get some good speakers up quite often, so there's quite a bit going on. It's quite a bit to learn from it at the very least. All right, so overnight markets, not a big move. You see the SPY. We'll just start off with the action on the SPY. You can see this is the day's action. Pressed down into that support zone at 66.46. I didn't expect that kind of weakness to come into the market. Then it did bounce in the European session, sort of edged lower, and then into the US close. It bounced back up, held this little minor high low. But just be wary, it didn't punch through this high very much. So you've got this sort of this action, and the SPY could do a lot of the times just come down and then bang straight through. Because what it's actually doing is looking a tad heavy where it is at the moment. So you've got, coming off the high, sorry, you've got these highs that are built up here, a little minor lower high, well, lower high in here at 67.54. It's led to a bit of a sell-off, and now we're being capped again at 67.11. So the sellers are starting to step in a bit lower and potentially pressuring this market down. So we could be looking at, let me just draw that, a bit of a lower high holding here again with a bit of a clean out. We don't know. I mean, if this market opens up and continues up here, then yeah, different story altogether. We might just get this rangy sort of bound action between 46 and 11, this support and this resistance. But at the moment, if this holds, if the market sort of pops down and holds below this zone at around 66.87, we might see some more pressure come into the market and push the market, well, maybe today down to test 66.46 or below. There is a potential for that to open up. And what also this action does, it drags, and you can see people have been buying off the support, bought it in here. It can drag in a bit of confidence into the market and just see, okay, we bounced off there, got a high, low, buy. They get sort of dragged in for the long positions, and then turn around and squeeze back out again. We'll have to wait and see. So the US was down slightly overnight. I'll just get up. I've got to find, this is relatively new to me. Let's look at the Dow. Here we go. That's what I'm after. That's the Dow action from overnight. This is just the Dow index. So that was the open around 11:30. It pressed out on the open, and that's, there was talk back and forward. So China's Commerce Department said something during the European session. They buoyed Europe, and then the US Open, they were talking about, was it Huawei not getting the extension from, I don't know what it's called, but that's pressured the market or capped the gain. So that sort of pressed down, and then I think China put out some sort of announcement on trade as well later on, and that's buoyed the market. So the market's just whipping back and forward depending on what, and it's not even, there's no real facts that are coming out in these announcements. It's just all comments. So the market's on both sides of the fence. Like we said, you got trade, which is capping it. The concerns of trade, excuse me, capping the market, and then the actual numbers coming out of the US still good, and that's sort of bringing some buyers. So there's probably, I think, investors are shorter term at the moment, and not these longer term building up, for new highs. I would suggest they're longer term investors are either potentially just holding or maybe jumping out, but I wouldn't expect they'll be loading up on positions from here. I think what we're seeing is just choppy action. It's good for intraday trading. You can sort of, buy it off the news, you get your setup, and then some news comes out, sell into it, that sort of stuff. But what we're seeing, you've got this this top in play at here, 27,300 thereabouts. Market's been pressured back down to this zone around 26,717, 710. It could potentially break through that, close this gap. I don't put the key level is right down still, right down. It's somewhere around 25.4, 25.5. Sort of pressure in that market. That's holding up. Sorry, and you got a high. Well, we can probably extend this, can't we? Extend this high. So it's looking. I mean, that could be heavy. We don't know what's going to happen. This market can contract, hold up this zone, start to hold a higher low, and then bang, up we go. And there is some sort of technical pattern could be playing out now off this high low, which could, if we get through this high, just this minor level at, what's that, say 2,700 even, pop up through here, we could be attacking those highs and breaking through. So really, it's all trade related. I think there was some news that came out last night on, now what was it? I don't know if it's consumer confidence, but basically more negative for the consumer. So they're starting to question how long can the consumer in the US hold up the economy, because that's the main driver at the moment. We'll just see how that goes, how that plays out. But I think there's a few headwinds, but it seems to be holding, at this stage anyway. Let's get on to, so that's the S&P. Let's have a look at the, sorry, that's the Dow. The S&P is very much the same. You've got a key zone up here. The market keeps running into, last time it traded up, pulled back, held the high low, pressed up into it, took out the highs, and then completely failed. And we got this move down. That was in August. Moved down, holding a higher level. If you look at that overall price action, we've got to clean out people, pop up, clean out people, pop up. So potentially, if you follow that trend, that sort of style, then that was a good little base it built, and it's projected the price back up into 3,000 above, 3,000, 30, 20. We're contracting off that level at the moment, contracting back off. So if we can hold another high low here, that could take us up and through into new highs. Again, it's all trade related. We've seen the market's up one night, the next night it's down, the next night it's up, the next night it's down. So, and that's not really anything's changed with regards to economics, the economy, all these different facts and figures. It's just seems to be based on news releases on trade, potential for a trade deal. Market pops up. Okay, Trump comes out and says something negative. Market pops down. So that's just the way it's going at the moment, and we have to sort of take each day as it comes. Let's just go to what else we got. I'll look at the S&P, our market, and then we get into some currencies and gold. Obviously, we just mark it up. We've got our highs up around, was it 68, 70, thereabouts. We've got a low that was put in place. I like to take in, when you've got a move like this, powered down, you popped up, you did take out the low, but to me, this is all one sort of bid zone. It's not smack on this low, it's not smack on that low. It's all one sort of bid zone, because this move down here, if it was really negative, it should have continued a lot further down, potentially down to that 6,200 zone. But instead, it's just pushed through the lows, started getting bought up again. Okay, next time, bought up slightly higher, up until you've got this level in here. Okay, when it was confirmed that we've got high low playing out, and then the market started holding. If you look at the most recent price action, this is, I think, what we should really be keeping our eye on at the moment. And that's because you've got this high in play, market's pressed down. Our biggest concern is that we're going to get a lower high, a key lower high, and potentially what we're seeing here is this key lower high hold here. Okay, so if that's the play, and there's a key lower high coming in, we expect the market to push down. And if we're thinking it's going to push down, we could be looking at something like this. The market, whoops, I'm still getting used to this. The market could press down through this low. That's ideally what you'd be looking at. So it's just whether or not, this is enough fuel. There's quite a bit of fuel from the start of the year that's built up long. We've pulled back, had a good, excuse me, had a good pullback, started to punch up into those highs again. We're failing at lower levels. So that's all suggesting that people who are holding it through here, or traders that are held it through there into the new highs, it's pulled back. Maybe they've got out of some, if you got out, if you got in at these zones up the top, towards the top of the high, and you bought into this dip, you probably cleaned out. If you haven't, you'd be thinking twice about getting out now. If you bought it anywhere through earlier on in the rally, if you bought it right off lows, fantastic. If you bought it later on off these higher lows through here, and you're edging into a portfolio of stocks, you've got some room to move. Okay, you've got a bit of a buffer, but sooner or later, you're going to be looking for that signs of weakness. And if anyone doesn't watch just what the overall market's doing, because I think what we're trying to protect ourselves against at any one time is a black swan event, or it's easy enough to buy the market, and if it's just cruising up, you buy on a high. If it pulls back, you can take the pressure, then it moves back up, and just in a bull market, when the market's in that sort of bullish mode, eventually they'll come back. But if you're buying on the highs expecting something to happen, the same sort of situation to play out time and time again, it just won't happen. And it only takes one time to get cleaned up. Imagine if you're holding it through the GFC, same sort of situation, bull market into the highs. Okay, just wait for another pullback, wait for it to continue on up. And you're not taking note of what the overall market's doing because you're just getting focused in on each individual stock. They could look great and then turn on a dime if something like a GFC hits. I'm not saying it will, but I'm saying that's what I'm always aiming to protect my portfolio and what I'm trading against that, because that's when everything gets chucked out the window and fear just drives the market lower. So we're just always, even though we've got a portfolio of longs and one short, I think we've got at this stage, still trying to protect myself against something that could just drive this market lower and create that fear enough, when it tips over like this, or back in August last year when it just continued to go down. Okay, people were tipped over, ramped back up, and by the time it started its second leg down, that's when fear was driving the market lower, and people didn't really care. They didn't really care what was happening. They just dived straight out of a lot of the stocks. Not all of them. I mean, there's some that weathered the storm, and that may have been ones that have already come under pressure individually prior, but it doesn't mean they're going to go up when the market's, the overall market's heading south. They'll probably more than likely just go sideways. So that's what I'm always focused in on what's happened to the global market, because it really does help you negate those massive losses that you can incur when things just head south. So in saying all that, I don't want to sort of be in a bit of an alarmist, but I'm looking for potentially some weakness. I mean, we could do a few different things. There could be this could be a longer term consolidation of the highs. And if we see that, we're going to get these bigger swings. We're going to get something like this, pop back up maybe round that, but that's more of what you'd be looking for, press down and then the failed, just the reverse of this. So you get this longer term contraction. You might get this pattern that's playing out like this, if that makes sense. So you get this longer term contraction point of agreement, and then generally the market's geared to go up. So you could find that if we start to base out through here, we might start to head up through these highs and take out new highs. And if that's the play over the longer term, off higher lows, you get that contraction in the market and then start to break up. If that's the play, you could look at longer term, a lot higher levels, I would expect. But it's this sudden, we have to sort of gauge what's going to happen on the downside. If this suddenly spikes down and then you get the reverse, you might get, I'm just drawing it up here. So we power down and we start to get this type of action play out. Again, that's what we're always looking for. We're looking for weakness to come in. If that's the case, then I'd suggest that we're going to take out that low, and it's going to be, then we have to just assess it as we go and see what plays out. But that's what I've got my eye on for the ASX. I think it's just this breakdown. Probably I'm on an hourly chart, by the way. Forgot to mention that, didn't I? That's your daily. But it's definitely the last couple of sessions is breaking down a bit. So we'll just have to see how far it's going to go, whether we can contract, and it could just be a basic washout before we hold a higher low in here somewhere, where we are, or 66, 20, 30 points low, above 6,600, hold higher low, and then punch back up through these highs. If we take out this level at 74, then yeah, game on again. Right, I'm getting carried away again, aren't I? easy for me to do. What have I got here? What have I got here? S&P. So we've gone through it. We don't really need to go through the DAX. The DAX come under pressure. It's bounced back the last couple of sessions, bounced back overnight. But I'd suggest that that is the futures actually. So that's popped up. It's not so bad. Normally you're looking at the DAX index itself closes around 1 o'clock. So they only see the start of the US, and if the US rolls over after hours, you expect the DAX to open weaker. I think the futures actually was propped up a bit, which wasn't too bad. Let's just have a look at what a few different alerts we had going. Well, not so much alerts through the app, but ideas we've been posting on. This is TradingView, by the way. So if anyone hasn't got TradingView, worthwhile jumping onto the free app or the free version and following us on capital T for trade, underscore capital S for setup. So trade setup with the underscore in the middle, capital T and S. If you search that, you'll find us on there, and you'll find we start to post bits and pieces, and we're using that as a forum to get our name out there, really. So here we go. Euro, we're looking at this off this level, and you can see this has been quite weak. You know, you've got a key offer zone up here. We could be going, well, whether we're going offer to bid, and we found the bid and we're starting to rally from there, we don't know, or whether there's going to be continued weakness, because the overall picture not looking too flash at all. Markets come down, popped up. That's a major, offer zone, lower high, liquidity coming in to sell the market down. If we just continue on this move, then we're going to lower levels. So we're alerting this. You got lower highs. So sellers coming in, pressuring the market down. Another lower high, come back up to retest. We were looking at this stage for a short. Didn't play out, but it did play out later on, and played out beautifully. It's just collapsed since there, gone down to the offer zone. So we're just the bid zone. So one to watching to see what happens from here. We still got this lower high in play. So lower high is going to press the market. So it could happen anything. As long as it doesn't break through that anchor, clearly break through that anchor. I don't mean just a bit of a washout like we saw here, but a clear breakthrough. And if you pull back into the zone, I'll be looking for a higher low. If we just go up and retest again, then I'm looking for weakness. So the trend for me doesn't change until the anchor is clearly broken. So the pressure's on the euro. Gold, I'll be interested to see how this plays out. I'll just go to our chart. So you can see that the market's been pressing up. We got powered up here. Let's just go. We powered up until we got to these highs when we started finding some pressure. And that's probably when the tone changed, I guess, between trade. And you've had such a good run. So you've had everyone, pretty much every man and his dog, for lack of a better term, has been buying into gold, buying into whether gold stocks. We saw our ASX gold stocks take off, gold futures, gold CFDs, whatever it may be, but they're piled into gold. And this is really the first cracks appear once we broke back down again and took out this zone around 1525 off the highs. What's happened though is we've retested this zone around 1490 to 1500 support zone. We've just pushed up. I don't mind the fact that we've broken through here, and this is it is a level in there. You've got and it was a minor level on the way down, which found some more resistance on when it popped back up. That sharp sort of rally, come back down, tested this level, held again. So there is still a safe haven aspect to gold. Still willing to buy as a safe haven, because of the trade concerns. I mean, my view is that China's not ready to come to a deal. They can say what they want, but unless they show some sort of action, and what they said last night, I think, is prepping them to put the blame back on the US for something not happening if they pull out. They talked about, I can't remember the exact wording, but if you look at the alert I sent out this morning, it had their wording in there, and it was more, it would come to some sort of amicable, or we learned to use the right terms. I'll find it because it's going to drive me crazy. Just 1 second. So this is the alert I sent out this morning. It was, here we go. So China announced they were willing to buy more US products, and that trade talks would yield results if both sides take more enthusiastic measures to show goodwill. To me, that's just a lot of fluff. So if you're saying that, it's like we're willing to come to the party, but the US has got to be really nice to us. And it gives them a good out if they could basically say anything. Trump comes and has one of his rants, there's a good chance they'll say, oh, look, they're not being nice. We're not going to do a trade deal. And it's just an excuse to prolong things. So I think the way they're attacking it is to put up these sorts of things. They're looking like they're trying, but realistically, they're probably, I feel, just looking for that deal to be prolonged. And they're not going to come to any deal anytime soon. So that, for me, would seem that gold's going to hold up here, hold up above. If not, it's going to come crashing down. It's really put the squeeze on these longs. There's been enough action above that zone, which could easily find some support, and it'll be interesting to see if we can get a safe haven bid that gives us a support zone somewhere where we are at the moment. And if we can start to pop up, there's sort of the two key levels really. You know, it's quite clear if it holds this, pressing down, that's going to be a lower high. If it starts to pop up and contract in here and attack this high at 1518 or even push through it, then yeah, I think that's going to be a key high or low starting to hold. But yeah, it's got to take some time to play out. Now, that's pretty much all I want to go over. Let's just have a look at where the SPY is again. And I've just lost that, haven't I? Here we go. So we've just popped up, retested, and straight back down again. I'll go to the 5. So at the moment, our market is looking to open up 25 points, I think. So from we closed at 4 o'clock, market's chopped around, but it's finished on the highs, I think 25 higher. So here we go, we're chopping around quite a bit on the open. We're starting to get through those highs. So it'll be interesting. Again, the ASX is 23 up, so I think the SPY might be getting a bit ahead of itself, but we could put on 5 points in the last 2 minutes quite easily. So that's it. For me on the SPY, again, I was just looking at, we're up at this key zone. I don't want to be buying it here. If I want to buy it, I want to see if it can pop up through the highs, pull back and hold a higher level, start to hold that moving average up and see if it can extend this move. But again, I don't know if there'll be a lot of oomph in that move. But again, we'll just have to wait and see. If not, we start to fail here. It could easily wash out this high, the overnight high, and come, which is just doing now. And if it continues on, great. If not, if it starts to fail here, looking for that lower high to pressure this market back down, because you've got enough fuel on the upside that's pushed up off this low at 66.60 that could be squeezed out for a move down. So I'm tentative to buy around here just because I think this could just be a bit of a washout, a bit of a setup. Get some longs eager again because we've had 2 days of drops, of falls in the ASX. Get them eager and squeeze them out into the close today. All right, that's it. Okay, it looks like we're open up about 31, 32 points, about a minute to go. So good luck, everyone. Have a great day. And like I said, if you want to get that link for the webinar I did last night, just shoot me an email to support@tradesetup.com.au and I'll shoot that out to you. Otherwise, I'll speak to you again on Monday. Thanks, guys. Bye.